Welcome, this is your Option Monster Volatility Sonar Report. From the floor of the SIBO, this is Jamie Tyrrell of Group 1 Trading. We've had a ton of questions about the VIX cash over the last couple of days, and the answer is pretty simple. We've had readings of the VIX cash in the 14 range, and frankly, those readings are just too low. They're not reflecting what is the actual bids and offers in the April S&P 500 options. Yesterday in particular, there were bids all along the downside in April, but a few strikes were missing, resulting in the entire downside being cut off the curve. At one particular moment, I noticed the April 1035 and 1030 puts, which are both worth in the neighborhood of 40-50 cents. A market was being disseminated, no bid at $1 on that line. Below there were nickel bids on the downside all the way down to about 850 or 800. If one were to put nickel bids into those options, the VIX cash popped from about 1480 to 1580. Once there's two strikes in a row on the downside in the April S&P 500 options with no bids, the rest of the downside is not considered. So during this week, we've had electronic markets in the S&P 500 that aren't reflecting nickel bids on options where in the crowd there would be a 25-cent bid, a 30-cent bid. As a result, the VIX cash has been reflecting artificially low this week. We're not sure when they're going to start quoting a little bit tighter in the S&P 500, reflecting the bids a little bit more aggressively. But for now, look at the front month future. It's over 17 right now. It settles in a week. Probably a better indication of where volatility actually is than the VIX cash, which has been leaving out a good deal of the April downside from the VIX calculation due to no bid options. This is Jamie Tyrrell with Group 1 Option Monster.